All right, let me get situated for this one, guys. So Apple's earnings are officially out, and the stock, you guys can see right here. Let me zoom in a little bit. Is moving. We closed at 237 on the day, and now we're up almost $10 after the bell. Let's just dive into it. So Apple reported earnings per share, let's see here, of $2.40, which beat the $2.35 expected, and sales came in at $124.3 billion versus $124.13 billion expected. And let me come over here to the actual earnings release, guys. Give me a second. And by the way, make sure to subscribe here. We're almost at 50,000 subs. It's nuts, guys. I really appreciate it. I think we're like 600 people away, subscribers away. So this shows you right here the growth year over year. So we're looking at the 3 months ended December 28th, 2024 compared to December 30th, 2023. Obviously, the left column is 2024. The right column is 2023. So total net sales came in at 124 billion, roughly 124.3 if we want to be exact, compared to last year's 119.575. You guys see that right here, right? And if we look at the services, that's broken down by products and services. So products revenue, $97.96 billion versus $96.45 from last year. That barely grew, but services grew a bit more. $26.3 billion is what they just came in at versus $23.1 billion from last year. So let's come over here a little bit, guys. Come down a bit more. I don't really care about the cost of sales for the sake of this video. Operating income came in at $42 billion or $42.8 billion versus $40.3 billion last year. That's good. Net income, $36.3 billion versus $33.9 billion last year. That's good as well. Solid growth. And let's come down a bit more. Now, I do want to focus a little bit on the net sales by reportable segment here. You guys can see. So Americas came in at $52.6 billion versus $50.43 billion from last year. So Americas grew a bit. Europe grew $33.8 billion versus $30.39 billion from last year. But Greater China, which this has been the case, continues to struggle. $18.5 billion versus $20.8 billion from last year. So, man, that's down, like $2.3 billion from last year. Not the best. Net sales-wise, guys, not the best. But looking here at Japan, $8.9 billion versus $7.7 billion last year. And the rest of Asia-Pacific, $10.2 billion versus $10.16 from last year. Well, I guess it's more like $10.3 billion. But, yeah, we are up across the board on all these regions or segments, whatever you want to call them, except for Greater China, which has been the case. Same old story there, right, guys? And net sales by category, iPhone actually declined year over year. Yep, you heard that right. $69.13 billion versus $69.7 billion from last year, so that declined. Mac came up $8.9 billion versus $7.7 billion. iPad $8 billion versus $7 billion last year. That's good. Wearables, home, and accessories, which this is interesting. Year over year, it's declining. $11.7 billion versus $11.9 billion expected, or not expected, from last year. So are less people buying the watches, the accessories? They very might be buying it less, right? And I've had this watch here, guys, for, I don't even know what generation this is. The iWatch for like 5 years at this point. I feel like you don't actually have to get these every year. I mean, if you're getting the new watch every year, do whatever you want to do. It's your money, guys. But I'm like, it's kind of a waste in my opinion, even if you can afford it. These things are meant to last for a couple years. I don't know, but I guess if you want the new tech, do what you got to do. But it seems like less people are buying the wearables. It's slowing down a bit. And quickly, might as well look at the balance sheet. Total current assets, it looks like here. Let's zoom out a bit, actually. Hold on. There we go. So it looks like total current assets are at $133 billion. I mean, we all know their balance sheet's great. Looking at their total current liabilities, $144 billion. Looks like they have $61 billion in accounts payable. Looks like here $8.4 billion in deferred revenue. How much cash? Cash and cash equivalents, $30 billion. I mean, think about how much they can do with that. And yeah, I mean, not bad. Solid balance sheet. We all know Apple's got, one of the better balance sheets out there. And that's pretty much it in terms of Apple, guys. I mean, I wanted to dive deeper into the guidance. I'm not seeing anything here on guidance. Maybe if I go back to Thinkorswim, it's there. But then again, a lot of these tech companies or just companies in general, I feel like they have not been providing guidance. Some of them at least. Let's see if they have guidance here. Not seeing anything on guidance, but I would say a pretty good report out of Apple. Solid growth in certain segments, certain regions. I mean, yes, iPhone growth is pretty flat. I mean, it's declining a bit, but I mean, do we not call this out? This is like the textbook buy the dip opportunity. It was too easy. It was too easy. I mean, earnings would have had to have been freaking terrible for Apple to go lower. I was telling you guys this, right? I traded it, made some money. I told you guys, Apple, there is no freaking way it was going to go lower, at least in my opinion. Earnings would have had to have been just awful for it to go lower, and they were pretty good. And the stock started rallying even before earnings. I mean, this thing, 220 all the way to 240 pretty much before earnings. Now we're pushing 250, starting to really break out of here. So the inverse head and shoulders is clear on Apple. You guys see it right here. There's a lot more upside in the short term, it seems like. But of course, trade at your own risk, guys. Let's go over Intel. Intel just reported earnings as well. Their stock's up barely. It looks like 70 cents here after the bell. So Intel reported earnings per share adjusted 13 cents versus 12 cents expected on sales of 14.3 billion versus 13.8. So it looks like they double beat. That's good. They see Q1 2025 revenue of 11.7 to 12.7 billion versus 12.87 billion, so a bit lower there than the estimate. They see non-GAAP EPS of 0, break even versus 9 cents expected, so that's a bit worse than expected. But man, with how much Intel's just been in the gutter, beaten down, this wasn't enough to send it lower. I mean, that's crazy. That goes to show maybe we're close to the bottom. I don't know. I mean, earnings weren't the best, I guess. Guidance, soft. It was definitely soft. And the stock's moving. I mean, is that a sign of a bottom? I don't know, man. Maybe we got a little bullish divergence here. Hey, I'm not buying Intel myself. I think, or I don't know if it's a value trap. I think it might be. But I'm staying away personally. But hey, if you want to go for it, I mean, now might be the time. I mean, the stock's down so much. If it's not now, when will it be? I don't know. I mean, if it falls through 20, that's not going to be good, Next support's around $18. Then if that breaks, we could find ourselves in the 13, 14 range fairly quickly. That's kind of what I'm scared of, why I'm avoiding it. But if you believe in it, man, you think this could be the bottom. We have been consolidating at 18, 19, 20 bucks for months. Hey, it might be your time. Who knows? Visa is the third and last stock we're going to cover in this video, guys, which keeps on moving. Visa up another $10 after the bell. The company reported adjusted earnings per share of $2.75 versus $2.66 expected. That beat, and they beat on revenue. 9.51 versus 9.34 billion expected, so a double beat for Visa, which is awesome. Looks like payment volume up 9%, cross-border volume total up 16%, processed transactions up 11%. Hey, what more can you ask for, man? I think MasterCard was this morning. They crushed it as well, right? Yeah, I mean, these stocks guys are going bananas. And at this point, I probably would stay away. I think they're a little overbought, both Visa and MasterCard, especially Visa, guys. Oh my God, look at Visa here pushing all time highs after the bell. Wow. So, yeah, I mean, that's pretty much it for the video, guys. Keep an eye on Apple, obviously, Intel. Keep your eyes on Visa, and just look at my watch list here, man. What a green day it was. OKLO up 18%. Las Vegas Sands 11%. Alibaba, a lot of these Chinese stocks moving. Big Tech, you name it. Google's next week, so keep your eyes on that one. I'm pumped about Google. Amazon as well, I think, is on Thursday next week, right? The 6th. Let me double check on that. Yeah, 6th after the bell, okay? So, yeah, keep your eyes on these stocks, guys. It was a crazy day, crazy good day, turnaround day at that. And yeah, I'll catch you guys in the next one. Do not forget to get your 30 stocks for Moomoo in the bio. Deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You get 25 more stocks. I know, it's crazy. And all you got to do is use that link down below or go to stocksurfest.com/Moomoo. And with that being said, guys, cheers. I will catch you in the next video.